Okay, everybody, it's me, Gregory Mannarino. It is Sunday, August 21st, 2022, and this is my newest segment of Markets A Look Ahead. We have a lot to talk about. I want to start off with putting perspective on something that I believe eludes a lot of people. What am I talking about? What do we know is going on? It's always important to know or contemplate what's happening and its effect. We realize that here in the United States right now, under the current administration, we are seeing an interesting set of dynamics in play. Off the Richter scale, spending beyond anyone's wildest imaginations. I mean, we've really taken this to a new level. What no one's going to tell you from the current administration or a Federal Reserve president, a chairman, is that this mechanism itself, by, just magically creating reasons to spend, is massively inflationary in itself. Now, how is that? You've probably heard our very, very nice president, I'm being nice here, deny repeatedly how this spending extravaganza from hell is not inflationary, but it's a complete lie. Now, let's talk about how currency actually works just real quick. So let's just say, for example, some new bill is put into effect, some new act like the Inflation Reduction Act, I'm laughing, is put into effect, and it calls for hundreds of billions of dollars in spending. Where's that cash come from anyway? We don't have it. Okay, we have to borrow it. We need to borrow it from the central bank, who is more than willing to lend. What is the goal of central banks? To be the lender and buyer of last resort. Every single central bank on the planet has one product. They have one product. They produce debt, and they do this in the form of issuing currency, which they are more than happy to lend. Okay, that's their power. A central bank's power resides in its ability to issue debt. The more debt they issue, the stronger they become. Okay, now, so that's basically the premise of how currency works. But how is it inflationary? Let's think about that for a moment. How does a newly created bill from any central bank actually attain value? How is it worth whatever it's printed at? Let me ask you a question. Okay, do you believe that let's just say with the Federal Reserve creates a bill, they print it or they add it to a digital screen? Is it automatically worth $1? What do we know, again, what has been going on since time immemorial? The value of the currency, or a dollar, has been dwindling away to a point where a dollar today is worth about 2% of what it was once worth years ago. And how is that? Why does that happen? What's the mechanism behind it? Well, it's very, very simple. Again, going back to how a bill attains value. So the Federal Reserve just says, hey, you know what? We're going to create one single dollar out of thin air. We're going to print it. We're going to add it to a digital screen. How does that bill now attain value? Let me explain this to you, and I want you to focus on this. That bill is not automatically worth $1. That bill enters a pool, a massive pool of already created dollars, and it must steal a fraction of a fraction, going back pretty far here, of value from every single other existing bill. That's how it gains its purchasing power. You understand? So every bill created out of thin air by a central bank dilutes the value of the entire pool of existing bills in any form, digital and or otherwise, and it creates inflation by devaluing that new dollar because, again, it has to steal value from every other existing bill. So when you have an act of Congress, whatever it might be, calling for hundreds of billions or trillions of dollars in spending here, realize each of those dollars that are going to be created, or fiat currency, now has to steal value, a fraction of a fraction of a fraction of a fraction, from any other existing bill. So this is inflationary. The currency loses purchasing power with every single dollar that is just created out of thin air. Believe what I'm telling you, that our politicians, all of them, understand the premise here. They realize what's going on. There, you have to realize also, again, politics and central banks are linked. There's no way to separate what's going on here. Central banks are the ruling body of the world, period. They control the entire financial system, which gives them more power than you can possibly imagine. Here in the United States, the Federal Reserve has the full backing of the United States military, its entire arsenal, okay? The petrodollar exists for that reason. The United States military must defend the petrodollar with force, okay? And that, again, is the Federal Reserve, who sets all the rules here. The petrodollar, the fiat monetary system, exists because the central bank and the military must protect it. So that's how the dollar really gains its strength here, because of the U.S. military mandate that it must protect the petrodollar. Okay, so with that in effect here, understanding how it works, do you realize the game that is being played on you right now by the current administration, by any administration that's just pulling cash out of the future to fund this, to fund that? And this also is how the system has to function. Again, it's debt-based. The debt-based system at its core demands that more reasons be created to pull cash into the now from the future. And that also is massively inflationary by devaluing the currency, by having its purchasing power dissolve. Let's talk about that for a moment. What have we been witnessing for many, many months now? Something we discussed right here on this blog, that the relative strength or comparative strength of the dollar would continue to rise, while its absolute strength or its purchasing power would evaporate. That is exactly what has been going on and will continue to go on, regardless of anything they're trying to tell you. Okay, for example, the Federal Reserve is in here and they really want to fight inflation. Nothing could be further from the truth. Between our politicians, our loving, caring politicians here, and the central banks wanting to be the lender and buyer of last resort, it's over. And what we're seeing too is a side effect of the scheme, that's what it is, to continue to borrow from the future. I've been explaining to everyone lately that we're going to hit a moment of maximum saturation. That's what I call it. A moment where no matter how much cash, or because of the cash that they're pulling into the now from the future, the side effect is massive inflation. Now, at one point, this is going to overwhelm the system. We're going to lock up, credit freeze, no lending. Everything just freaking stops. So you can see how this logically is playing out right before your eyes. You don't have to think about it. It's actually happening. And the lies and the tales and the propaganda and the distortions of reality are going to continue to be fist-fed to you. And I was just writing down a few things here before we go to the market. Okay. What's going on? Well, we have a cost of living crisis. I think everyone knows that here. You got rents continuing to skyrocket. You got real wages, that is what people earn based against the actual rate of inflation, which is way worse than they're even letting us know about. It's in the negative, okay. People being robbed blind because of suppressed rates since 2008. Trillions of dollars in real wealth has been stolen from savers. You have a savings account, even a high yield savings account. You're watching your purchasing power evaporate here. Doesn't remotely keep up with the rate of inflation, even using their own numbers here. It's theft on an incredible scale. And all this has been doing is propping up the stock market here, causing distortions across the spectrum of asset classes with regard to price discovery. There is no price discovery anymore. No asset has a real price discovery mechanism in it when you have the debt market being fueled, the global debt market being fueled by central banks. And this phenomenon of inflation, of real wages cratering, cost of living crisis, energy prices surging, this is a global phenomenon. It's not just here in the United States. This is central banks working in concert to bring the world to its knees. They are the ruling body of the world. You understand? I hope you get it. I really, really do, people. Anyway, so I explained to you basically how currency works, how this mechanism between politics and central banks works to deliberately create inflation. You understand? And how a fiat bill actually gets value. It doesn't automatically get it. It has to steal value from every single other existing bill. And that pool of bills is going to get much, much larger. You can expect global debt, and that's something you and I have spoken about for, years, to get monumentally worse here until we hit that moment of maximum saturation and this entire thing implodes by design. A new system is introduced. Control. That's what it is. Now, looking back on this market here, okay, we need to watch the debt market here. The debt market is what? What is the debt market? It's a time bomb. It's a ticking time bomb. And it's ticking louder and louder every day. In my view, when you see action like globally, like we've been seeing, that is global bond yields starting to rise rapidly, that's a sign of instability in the debt market. Central banks are going crazy right now trying to keep the debt market stable. And they do this by getting in here and buying more debt, okay? European Central Bank admits it. Let's give them some kudos here, that they're buying it all. They are across the entire Eurozone. Where's the outcry? I don't know. I don't see one. And the Federal Reserve is following suit here. Now, on Friday, when this market closed, we watched that 10-year yield. It's just a shade under 3%. The MMRI, Mannarino Market Risk Indicator, is now orange. It is flashing a warning signal here. I did read through the comments. I asked the question, do you believe on Friday that central banks are going to allow this to get out of control right here and right now with the midterms coming? I don't think so. I believe we're going to see a lot more effort by central banks to keep rates suppressed, to keep the debt market stable for now. Could I be wrong? Absolutely. But I can promise you this: if you and I witness a sell-off here in the debt market, we can watch this in two ways here. Okay, number one, you can watch the 10-year yield as an entity among itself. It starts to spike like we witnessed several weeks back, and we shot up to 3.5 from like 2.5. We had like 100 basis point rise in just a matter of days, hit the market pretty hard. If we see that again, it's going to hit the market again. And if it gets out of control and keeps spiking, it's going to destroy the stock market like people have no idea. We're going to be in a crash scenario beyond anyone's wildest dreams. But I don't think we're there yet. I really don't. Could I be wrong yet again? Sure. But we're going to keep our eye on the 10-year yield. Number two, watching the MMRI. Right now, it's, again, flashing a warning signal. We are orange. All right. Next step is extreme. So high risk right now. So keep your eye on the MMRI. Like I said, there is a link in the description of this video. Keep your eye on the 10-year yield. If you don't want to watch the 10-year yield or you don't understand it, watch the MMRI, which looks at the bigger picture. It utilizes the 10-year yield and the dollar, or the relative dollar strength, in a neat little equation that comes up with a neat little number, okay? And they're color-coded, so you know what's going on. We don't have to guess, people. I know there's all, the crash callers every month for years and years and years. They've been wrong 100% for years and years and years. But what they're not telling you, or they're trying to make you believe, is the stock market is an entity among itself. It's not. The stock market derives value from what's happening in the debt market. You all know that from following this blog. Now, okay, if we realize that, the big crash is going to start in the debt market. It's not going to start in the stock market. So follow the 10-year yield, or maybe even better yet, follow the MMRI, free to everybody. Again, link in the description of this video. You don't have to guess when it's going to happen. You're going to be prepared for it. You should be preparing for it. Betting against the debt, becoming your own central bank, holding hard assets, my favorite of all time, physical silver. I expect, honestly, moving forward to see energy prices continue to skyrocket, the cost of living to get much worse globally. All right, another crisis, a big one, to continue to borrow from the future. The mechanism is so twisted, it's so perverted. It's frankly disgusting what they're doing to people, and there's no outcry. There's none. There's nobody in the streets. They're all being distracted by what's happening over here, or go look at this and this little dog shit piece of news, whatever it might be. Meanwhile, they're allowing themselves to be destroyed by design. I think you are well aware of that. All right, people, kind of a long video. I'm going to end this here. Please share this. Please comment. What do you think about what I just discussed? Does this make sense to you? How I covered currency, how it works, how it gets purchasing power, the collusion between our policymakers and central banks, none more so than the Federal Reserve. It is a global phenomenon, people, and people are getting destroyed. It's right before your eyes, it's in your face, and they're going to tell you that everything is just fine. That's how you know it's not. Okay? I'm out of here. Love you a lot. Share the video. See you, of course, in the morning.